In today's crypto news, the Bitcoin price dumps almost 25% in the past 24 hours, and the entire crypto market is bleeding. That's right, Bitcoin dropped from about 10,300 all the way down to 7,800 on some exchanges. Just like that, we're going to be dissecting the Bitcoin price action and where we go from here. And in today's show, we'll also be discussing the $6,000 Bitcoin gap. Will it be filled before the 2020 halving? We'll be talking about this and so much more in today's episode. Here at Crypto News Alerts, I drop a brand new episode every day, so be sure to click the subscribe button and bell icon to receive notifications of the latest crypto news. Before we kick off today's show, I want to remind you about 5 coins to 5 million live cryptocurrency event by Teeka. If you missed it, you can still catch the replay by clicking the link right below this video in the description. During this live training, Teeka selects 5 tiny cryptocurrencies that he believes can turn a $500 investment into $5 million in as little as 10 months. He also reveals his #1 cryptocurrency pick. So if you want to find out what that is, click the link right below this video in the description. The last time Teeka shared his #1 crypto pick with us, it soared 1,800% in 9 weeks. So be sure to check out the replay. Click the link right below this video in the description. You will not be disappointed. All right, now let's get into today's show. As you can see, the entire crypto market is bleeding in the red. One of the worst days of 2019 for the crypto market. We saw Bitcoin drop almost 25%, dropping from about 10.3 to as low as 7.8 on some exchanges to where it's currently at, trading at $8,340, currently down 14% in the last 24 hours. Ether down 15.51%, trading at $166. XRP down 11%, trading at 23 cents. Miss Litecoin down 17%, trading at $54.45. EOS is down almost 22%, trading at $2.79. Even BNB coin, yes, Binance coin is down almost 20%, trading at $15.33. So as you can see, this is a bloodbath. Now taking a look at the biggest gainers for the day, we got Crypterium up 5%, Monacoin up 2.4%, Stasis Euro up 1%, Tether up 0.35%, which is interesting considering it's a stable coin. DAI is a stable coin as well, up 0.28%, and USD coin, another stable coin, up 0.2%. It's pretty sad when the stable coins have the biggest gains for the day. Now taking a look at the biggest losers for the day, you got V Systems down 30%, Bytum down 27%, Algorand down 26%, Bitcoin Satoshi Vision down 24%, IOST down 24%, Beam down 24%, Lambada down 24%. Holy shit. Pretty rough day in the crypto market. Now let's take a look at the CME 4-hour Bitcoin charts. As you can see, we had this gap here, which we did fill at about right here, about the $10,000 mark. We had another gap all the way back here, which we've been talking about on this channel for a long time, from about the $8,500 to $9,000 range. We just closed that gap, which was long anticipated. But guess what? There is another gap, as you can see on the screen right here, between about the $6,400 to $7,000 mark. Is this the next gap to be filled before the halving? Let's talk about it. Here's a chart that was published 2 days ago by Trading Shot before this massive dump, which predicts, will the $6,000 gap be filled before the halving? And here's what Trading Shot had to say. As the new bull market progresses, Bitcoin has left few questions unanswered. One of those has to do with the historic tendency to touch the 0.17 Fibonacci retracement level before the halving during the second accumulation phase. Let's take this from the beginning. Each Bitcoin cycle is divided into 5 phases, as you can see right here on the screen. But let's take this from the beginning because each Bitcoin cycle is divided into 5 phases. As you can see here in the graph, we have the strong bull run phase, the bear market phase, the first accumulation phase, the expansion phase, and the second accumulation phase. After each all-time high, the market top and price declines rapidly as it enters the bear market. After forming a bottom, the price starts to consolidate state, which is the first accumulation phase as it accumulates buyers on what is the bargain price. Then we witness the first rise expansion as more retail buyers join those who bought at the bottom. The price then accumulates again, which is the second accumulation phase as it's preparing for the halving. And then finally, the halving paves the way for the final strong bull phase that leads to a new market top. And according to Trading Shot, we're currently on the second accumulation phase of Bitcoin, which has been consolidating for nearly 3 months since June's $13,700 high for the year. This seems to be natural as it's in line with the historic pre-halving consolidation. The big question which remains is this: will it fill the 0.17 Fibonacci retracement, which is currently near $6,000, as I pointed out on the CME futures charts? It might, but at the same time, the hyper strong support provided by the historic parabolic channel indicated on the chart by the dash curve can issue a bounce before reaching that level. In essence, the longer Bitcoin consolidates above 9K within the current triangle, the fewer chances it has to approach $6,000 eventually. What does this mean for us long-term investors and traders? It means that with time, such a pullback becomes more unlikely, but if it happens, it will be the last great bargain price before the new third halving institutes the strong bull run into the new market peak, as it will be extremely unlikely that we will ever see these low levels again. So right now is a buying opportunity, a great time to pick up some Bitcoin. I don't give investment advice. Invest at your own risk. I am not responsible for any investments you make into cryptocurrencies and whatnot. Anyways, what do you think? Do you think we will go down to the $64,000 to $7,000 level, filling those CME gaps that we can see right here on the screen? Because past has showed us every time there's been a gap, we've gone back and closed it. Will this happen again? Let me know what you think right down in the comments below. All right, now let's get into some Bitcoin price analysis. Yesterday, we saw a breakdown in Bitcoin below 10K support area against the US dollar. That's right. We're currently trading at $8,000. The price remained in a bearish zone and broke many supports near 9,800, 9,500. Moreover, there was a break below 9,000 support and a 100-hourly simple moving average. Finally, the price traded close to 8,000 and again on some exchanges went as low as $7,800 level and registered a nasty decline. When I say nasty, this is nasty. A low is formed near 8,055 and the price is currently correcting higher. There was a break above the 8,250 and 8,400 levels. Moreover, the price traded above the 23.6 Fibonacci retracement level of the recent decline from 97.79 high to 8,055 low. However, the 8750 level is acting as a strong resistance. The next resistance is near 8920 level, which coincides with the 50% Fibonacci retracement level of the recent decline from the 97.79 high to 8,055 low. On the other hand, if the price continues to struggle near 8,750 and 9,000, it could resume its decline. An immediate support is near the $8,400 level, below which it could test 8,250. If the bears remain in action, there's a chance of a break below 8K. The next major support is near the $7,500 level. So there is a strong possibility that we continue to go down, possibly closing these CME futures gaps. Looking at the chart on the screen, the Bitcoin price is clearly bleeding below 9,000 and it might continue to decline. It seems like there's a high chance of a break below 8,000 in the near term. And in other crypto news, back slow start doesn't mean that Bitcoin futures have flopped. We're going to be talking about this because, as you know, they launched on the 23rd, and since that launch, the Bitcoin and entire crypto market has dumped. It's a lively time for Bitcoin derivatives, or at least for those writing about them or those trading them. It may be business as usual. The Chicago Mercantile Exchange announced Friday it's preparing to offer option trades on its Bitcoin futures contract. It's a surprising move because options volume to date rounds to zero as a percentage of reported volume in futures and swaps. Still, nobody in crypto has had options counterplay as reliable as CME before. And as you can see on this chart, this is the Bitcoin derivatives average reported daily volume aggregated between August 20th and September 19th. The announcement gives the CME a way to offer options without having to build much anew. Why should it? CME's Bitcoin's future market represents a tiny percentage of its overall volume. Nevertheless, the CME may be feeling a shade of anxiety about its leadership position in regulated crypto derivatives markets, with Bakkt rolling out out a regulated Bitcoin futures contract this week that, unlike the Chicago exchanges, is settled in actual Bitcoin rather than cash. After all, people in Chicago who trade a lot of Bitcoin seem to think physically settled futures are important. Maybe CME's announcement lets it steal a little of Bakkt's thunder. Speaking of Bakkt, its October 2019 monthly and daily contracts launched on Monday. The first day volume in the monthly contract was just 71 Bitcoin. That's rather anemic compared to the start of the CME product in December of 2017, which isn't necessarily apples to apples given CME futures launched near Bitcoin's all-time highs. The Bakkt one-day futures contract is more intriguing product of the two. It could be anything from a CFTC regulated fiat on-ramp to a duplicate of the popular BitMEX perpetual swap if traders use the T+2 settlement to build a forward curve and continue to roll contracts. Now, here's a persistent myth. The first regulated Bitcoin futures came in December 2017, just before Bitcoin's price began a long slide down 83% from its all-time high, with volumes under 100 million. However, it would be hard to argue that futures trading brought sanity to the markets. Instead, it's more likely that slow demand for the new product punctured the myth of institutional demand for Bitcoin exposure pent up behind compliance departments' insistence on a regulated product. The myth is alive and well today among retail-focused crypto analysts, as a search for back volume fail will show you. If you were around in 2017, you didn't need time to travel to know to short Bitcoin on Monday. You've seen this movie before. Even the least sober among us in 2019 recognized the obvious, that institutional investors' interest in Bitcoin is developing slowly when it is developing at all. For institutional investors, derivatives offer readily understood solutions to operational obstacles related to custody, inevitability, and risk. Still today, the lion's share of the volume is on unregulated exchanges that don't operate as clearinghouses and offer leverage up to 100x. And as we can see here in this chart, BTC futures and perpetuals average reported daily volume from 8/20/2019 to September 19th, 2019. You can see BitMEX has the lion's share with 2.86, OKEX with 2.39, and then it goes on from there. Now let's discuss the road ahead. Derivatives may be gold bricks paving the road to institutional investment in Bitcoin, but it's a long way to the Emerald City. Right now, the CME futures volume is as good as a guide to any investor's progress along the road. You may have seen charts showing the rise in CME volumes in May. That rise also coincided with a twofold increase in the price of Bitcoin. Measured in Bitcoin terms, CME futures volume surged in July and is now back trading at a modest growth rate at first quarter levels, as you can see right here in this chart. Now let's take a look at the BitMEX margins. We can see the bears are totally dominating right now with 475 million in superiority in the past 24 hours, with 53.02% shorts versus 46.98% longs. Are you bullish or bearish on Bitcoin right now? Let me know in the comments right down below. Now taking a look at the crypto greed and fear index, you can see right now we're in extreme fear with the 15. Yesterday was fear with a 39, last week was 31 fear, and last month was extreme fear with the 20. So we're even in more extreme fear than we were last month. Well, that's going to conclude today's show. As always, I appreciate you tuning in. Don't forget to smash that subscribe button and click the bell icon to receive notifications of the latest crypto news. And oh yeah, if you missed 5 coins to 5 million by Teeka, you can still catch the replay by clicking the link right below this video. During this live cryptocurrency trading event, he releases his #1 cryptocurrency pick of 2019. The last time he shared this information, his #1 pick soared 1,800% in 9 weeks, and you can find out for free by clicking the link right below this video in the description. Enjoy it, and I look forward to seeing you on tomorrow's episode. Peace.